Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Got a couple of guests for you. Sasha Evdokov at 8:15. He's a trading educator and mentor, the founder of Rise to Learn and Traders Fly. Then we're going to be joined by Nick Shaheen, as we are every Tuesday at 8:35. But before we get to those guys, we got to talk about it seems like the big story of the market, and Dennis and Joel are going to have a long conversation about this, is how do you approach this market, after tragic events like last night in London, and what do you do? We have some movers to discuss as well. We'll get to those, but I'll let Joel and Dennis kind of hop into it. First, Joel, give us a look at the S&Ps, and we'll go into our little discussion.
All right. Amazingly, they're trading up 3.5 points this morning at 96.25. Pre-market high 97.75. My number of the day is 23.9850. That's our old-time closing high. Crude in the red by 9 cents, and gold and silver are down despite the events that took place last night. I'm going to bring Dennis in here, and Dennis, just relaying prior market experiences to what we're seeing going on in this current environment. It's kind of hard to believe that after something that took place last night that no fear in the market, S&P futures are in the green.
It's unbelievable. If you look at this, and here you have a terrorist attack. Are they calling it an official terrorist attack now, Spencer? Because we know that's what it is.
I believe so.
Okay. 22 people die, and do you have to give the details, because maybe somebody might have missed it that's listening to the show here from last night. I don't know if anybody did, but
Okay.
Give the details exactly what occurred in the UK there last night, and then we'll talk about what's the impact on the markets here.
An Ariana Grande concert. She's a pop singer, American pop singer, in London. Bomb went off at the end of the show in the foyer of the concert hall. About 20, I think what last I saw was 20 people have been confirmed dead, and I think people are still looking for their children. I think people were at the event to pick up. It was the end of the show. People were there to pick up their kids. So yeah, and I believe it's being called now a terrorist act.
First of all, tragic. This is awful. And, you obviously, you feel for those families, you feel for all the people over there, horrifying event for them. But, you come in here and now you look at the markets and you think if this, if you were to say, just, logically speaking, and we're trying to talk logic here right now, that there was going to be a bombing at a theater in the UK and 22 people were going to die, you would logically think that the market is going to fall. How is that good news? How is the market better today for having lost 22 people in a suicide bombing? It's it's unbelievable.
Not a suicide bombing. I don't think that was it. I think it was just a bomb. A bomb was detonated.
Okay, a bomb detonated. So in any regard here, how is the market supposed to, you come in here this morning, and I'm absolutely in shock that I can see the S&P futures trading up here once again. They're bombing concert halls here now. This is horrible. This is just scary. What if this happened in the U.S., Joel? What if they bombed the Madison Square Garden? Would the market be up? Seriously, I'm asking that question because I can't understand this market anymore. When it wants to go up on every single thing, we get a bombing at a theater. Sounds horrible. I think if this would have happened 5 years ago or 7 years ago when the market still had logic, I think we'd be down 300-400 Dow points today. This is horrible. And the market goes up on it. It kind of makes me sick.
Well, John Dotson just mentioned it in the chat here. This Ariana Grande, she appeals to, the tweeners, a young crowd. They were going after, they targeted children. And,
it's horrible.
Yeah. And that just goes back to a quote that I always remember, Golda Meir, Dennis. I don't know if you remember who she was. She was a former prime
You're
minister.
dating yourself on this one, I think.
Okay, all right. Well, everyone's heard of it, and when she was asked about when this insanity is going to end, and she said, when the terrorists start loving their children, more than they hate us. And this is just a great example of that. I mean, willing to sacrifice. I don't know if this was a suicide bomber. I guess it wasn't. But when you're dealing with a group of people with that kind of mentality, it's impossible to combat. And
It's
here we are talking about the markets, Dennis. And I asked you on the pre-market show. I mean, what do you do? I mean, short-term trader, long-term perspective. I mean, it's just impossible to look at this. It's hard to think about money under these kind of situations. But when you see the market reacting like this, it just makes absolutely no sense.
It makes no sense at all. And Jimmy a great point in the chat. He's just saying the market is disconnected from reality. And after an event like this, I have to agree with them. I mean, I can't understand the logic why people and we've got Matty G saying the UK market is up today. How are we up in London here today? If that's true, I'm not looking at the London markets, but how is the market up? It doesn't make any sense anymore. I mean, are we totally disconnected? Do macro events, do fundamentals not even matter anymore? We just got to buy every pullback. I mean, we pulled back 4 S&P points last night, which didn't even seem like much after, a significant event like this. And, we just buy it back once again. Is everybody that desperate to be in this market that they got to buy terrorist events now? It makes no sense. I mean, I'm almost at a point and I'm, got my investment portfolio there too, and you just can't understand it anymore. I mean, you got to look at, people. They must just be so underinvested, everyone. All the, the money managers and, the little guy there, that every time we pull back, they're just scared they got to be in. And we were talking about and joking about it yesterday, the FOMO market, fear of missing out. I mean, you're coming here buying after terrorist events now. It doesn't make any sense.
I guess it's the only thing just to wrap up this conversation, Dennis. And if you look at it in the perspective, long-term perspective of like 9/11, correct? And
Yeah.
what they were able to pull off with that and the shot that it had to the country. And this is a real stretch of thinking here. But now this is what they're relegated to, blowing up young kids at concerts.
Horrible.
I mean, perhaps, their resources are dwindling down. We have better intelligence. I mean, obviously we can't have perfect intelligence, but, maybe there's the attitude is that if this is what they can pull off, and this is, I don't want to say the best thing they could do to terrorize, the world, then maybe we are getting closer to a solution, maybe figuring out taking care of ISIS. So, I mean,
I just think it's getting worse though. Like now a concert hall, like that's got me scared. Like not that, nothing's happened over here, obviously North America significantly here, but what's to say it can't happen? I mean, it's probably going to happen over here eventually, and it's scary. I mean, when you're killing children, what kind of people are these? This is just so horrible event. And and you feel for all those families and you feel for all those people over there, but I can't understand the rationality behind the market to buy it here today on this. It just makes no sense to me. I mean, if this doesn't bring the market down, events like this doesn't bring the market down, what's going to bring the market down?
Yeah, and I think also you have shorter term, traders that reacted to the news. Has happened. I think while the SPOOs were closed between 5 and 6, you could see. Maybe I'll go to a 5-minute chart here. So they,
Sure.
the people start hitting bids in the S&Ps and stuff, thinking, "Yep, this is it. This is the event." And then you get a little bit of consolidation, and then the market goes right back up. So you have people that are shorting it off this kind of event, trying to capitalize on it, and then the market just turns and make it a new all-time high in a day like this. Spencer, you want to wrap up this conversation?
Well, I just wanted to say what we were talking about on the pre-market show about people just wanting to buy into them. People who maybe lost their shirt, during the financial crisis, just wanting to buy in no matter what, right?
Yeah.
So anything that happens, they remember, oh, well, I got out. I sold at the bottom last time, and I lost my shirt. I'm not selling this time. So, maybe that's driving the market up. There's people.
There's no fear. That's some of it, Spencer, because there is absolutely no fear in this market. An event like this really shows you how little fear is in this market. When it's up after an event like this, it's shocking to me. Like I knew, we're in this no fear market, but this is at a whole nother level when you can have, major terrorist attacks happening at concert halls and the market just shrugs it off like it doesn't matter. It's unbelievable. And, I just feel, I feel for all those people, but, obviously our job here on the show is to analyze the markets, and I can't even rationally understand it. So, I've been trading 18 years. I don't understand this market at all now. Not after something like this. So, maybe it's just everybody just buys the dip no matter what. Like you're saying, Spencer, people are underinvested. A lot of people did sell the bottom. We've said this is, and they've said on the media, this is one of the most hated bull markets because a lot of people sold the lows in 2008, 2009. And we've been pretty much straight up since. And I mean, if you're a major money manager and you've been underinvested that whole time, you're chasing the market. And, if you thought, this event or even the Trump scare last week, and that, obviously maybe you're potentially going to impeach him, that's what they were talking on the Wednesday. I mean, that's all forgotten immediately. People are just underinvested, and every single time we pull back a little bit, they're scrambling to get back in stocks, at least in the S&P. And there's individual stocks that get killed, so it's not like every single stock's going straight up here. But, the overall market, money doesn't rotate out of stocks anymore. It used to rotate from stocks to bonds or to rotate from stocks to cash. It just rotates from some stocks to other stocks now. When you have a stock getting killed here this morning, and we can see like a stock like AutoZone, we have individual stocks that are getting rocked. AutoZone's down 60 points here this morning. It's a stock that's getting rocked. But, that money will just rotate into other stocks. It's not going to rotate out of the overall market. And that's the difference here. And that's why I guess, you've got to just say this is a bull market. It's a full-on, a raging bull market. And, it's maybe not going straight up like some of the bull markets in the past, but nothing seems to shake it.
Ethan G is asking, is this the most bullish market you've ever seen? And
it's the most. I don't know if you can say that because obviously I was there in 1999 and 1998 before I started with Bright. And you saw really irrational. People are just scrambling against stuff. It's not like that. It's not like bubble stuff where they're just coming in buying stuff hand over fist no matter what it was. But there's no fear in this market. There's no fear. People have gotten to the point where they don't think they can lose money. And they think every time you buy a pullback, and we've been saying this for 2 years, it keeps working. Every time you buy a pullback or 1-2%, you make money on the S&Ps at least, anyways. And until that stops working, it's making people less and less fearful. I mean, when you got the VIX sitting down here, at the 10 with the 10 handle on it, it's showing you there's no fear. But when there's a terrorist event and there's still no sell-off, I mean, that's telling you that this market just shrugs everything off. And I don't understand it. I think eventually there's going to be some other tragedy that's going to be major here, and eventually the market is going to respond to it. But it makes no sense to me that the market's trading up today.
And it's 382 SR00. I mean, this market's not being traded by human beings. A lot of it is being traded by is being traded by computers. So they have their support levels. They had based on the market data, they react to the data that's in the market, and there's not the same kind of logical thinking that there is behind humans. So we got about 2 minutes here, Dennis, before we bring on our first guest here. Any final comments, Spencer, Dennis? I know we could keep you on talking about this for a while, but did have trading action in Take-Two Interactive, and that was just unbelievable.
Wild too.
Yeah.
I mean, this market, it's hard to understand, the moves. So Take-Two Interactive last night gets killed, and I mean slaughtered, down over 10% because they delayed release of this one video game. Now it has a decent earnings report and it rallies the whole thing back. I mean, here's your buy the dip. I mean, the thing pulls back for literally 1 after-hour session. And it's a great buying opportunity. It's all the way back up here now. So, Spencer, go see earnings quick on TTWO. We know that the game delay last night is what hit it.
Yep.
Came all the way back here. It must have been just a hell of a report.
Well, the game that's delayed has been a very strong franchise for them. Is Red Dead Redemption 2. So anyway, onto the earnings report. Q4 EPS 89 cents versus 48 cents in the same quarter last year. Sales 571.5 versus $377 million year over year. So year over year, they crushed it. As far as Q4 GAAP EPS, or I'm sorry, Q1 GAAP EPS, they see for the fiscal year, $4.35 to $4.65 is the EPS they see for the fiscal year, and GAAP sales at about $2 billion.
So that game delay matters nothing now. I guess because the last quarter was good. I mean, I don't know. I don't know why they were hitting it down 10% on a video game last night, and then we rallied the whole thing back because the earnings report was good. I mean, going forward, isn't this going to impact earnings this video game? Because that's why they were hitting it last night. So, anyways, fade logic, because nothing makes sense here. So this is the nothing makes sense market. So I have no comment on take two.
I'll just give you one number only. The all-time high was made 5 trading sessions ago at 70.53. Your pre-market high is 70.40. So keeping an eye on that level. Of course, you get through there. More green skies ahead. But after seeing a 10-point drop and back up at an all-time high, just remember Children's Place kind of did the same thing. And keep an eye. I mean, busting out to 70.53. Green skies ahead, but we'll keep an eye on that level. Spencer, 8:15. We got a guest.
We do have a guest, Sasha Evdokov. He's a trading educator and mentor. Is the founder of Rise to Learn and Traders Fly. He's a trading coach. We're going to talk to him about his advice. We're talking about trading this market right now. We're going to talk to him about his general trading advice and how he gets mentally prepared for his trading. So we'll be right back with Sasha. All right, welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elkanin and Dennis Dick. We're on the line now with Sasha Evdokov, a trading educator and mentor. He's the founder of Rise to Learn and Traders Fly. Sasha, how's it going today?
Going well, as good as it could be. As you guys, I heard, we're talking about here some of these events. So, but as far as trading goes, you still have to look at the market as it is and continue moving forward.
So how do you look at the market on a day like today, where logic would dictate, the market should go down in theory, but it doesn't? So how do you interpret that?
Well, one thing that I deal with a lot of my students and over the years when it comes to trading is I find that a lot of people, they try to look for a one-to-one cause and effect relationship. This happens a lot with news events and catalysts, and we try to pinpoint things. Is the market going up today due to oil rising? Is the market going down today due to oil falling? And it's kind of like this weird connection that we always try and strive to make, that it's because of this reason. And that's what we as humans naturally want to pinpoint and we want to try and figure out. And that's why the news is really so interesting. So as weird as it sounds, you almost have to backtrack away from that and think of it kind of like a butterfly effect. There's also the inner butterfly effect that happens internally within us, but same with the market. You have the outer butterfly effect and you have the inner butterfly effect. And when it comes to the outer butterfly effect, we have all these different things happening with the healthcare bill, the federal rates, the interest rates. We have things happening with the administration, and of course with oil, with all these earnings. And it's not just this one item or this one terrorist attack really that moves the market. It's a combination of things, that it could be something in the future, something so simple or so minimal that somebody said one specific word, and it's because of all these other things that happened before it that actually moves the markets. So that's kind of the way I look at it. As I take a step back, and it's a progression of things that actually makes or moves that market. You have to be prepared for either the upside or the downside as a trader, either for the short term, the long term, depending on where you are personally. And that gets into our own inner game, our own inner butterfly effect. Well, should we do this? Should we do that? And then all our decisions continue to progress us in one way or the other. So that's kind of the way I look at things.
So, Sasha, you deal a lot with, as you mentioned, sort of like their inner mindset and the trader's mindset. Making sure you're prepared to trade. How did you, go about learning how to do that yourself? How to be prepared for trading?
A lot of it, I would have to say, was more about learning about marketing. So when I first got started into trading, in fact, it was many years ago, back in my teenage years, as I was building my business. So I was looking into marketing, how the psychology works behind sales, and human behavior. And of course, as my business built, I took those funds, put those funds into trading, and so on and so forth as we continue and evolve our trading accounts and get into investing. So, but with the education that happens is you start becoming more aware of, okay, what's going on underneath with the sales psychology, what's going on with the human behavior, just like, buying a car, you have that purchasing sequence. Not everybody buys a car in 24 hours. You have some people that'll go to a dealership and buy it right away, but other people, they have a 6-month time frame. So you start looking at the bigger picture, the longer term. And once you start becoming more self-aware, looking at yourself in the mirror a little more honestly, that's actually where you start to find more profitability. And you get to start seeing these things as well in the marketplace, in your own trading. And it's a process that we have to personally evolve. It's just a personal evolution. For me, the process or the progression was really through building out my businesses and dealing with people, working with people. But for everyone, of course, they can take a different approach. But that was just kind of my simplistic approach, if I was to explain it in as short as possible, was going through the business side of things and the sales side.
So you have students who watch your videos on YouTube and who you talk to. What is the biggest mistake you see your students making in their trading?
Everyone, of course, is different, but I would say the most common things I see, especially for newer traders to intermediate traders, is number one, trading too many stocks. For example, you might trade 10, 20 stocks. And for me personally, I say if you can keep it simple, that's usually the best approach. 2, 3 stocks at most, really focusing, watching on that until you get consistent. Once you get consistent, then of course you have that door open and you by all means can modify the game, sort of say. So simplifying your strategy, because the more complex you get it, once you put on, I see people put on Bollinger Bands, RSI indicators, you got moving average, well, the S&P is doing this, the moon is at this level, we got Mars opening up over here, and what do you trade? How do you make that decision? So keep it simple. If you can keep it simple, even as simple as just a moving average breaking out here for the stock with volume and good price action, then you get in the stock, and once it breaks down, you get out. That's probably the first main thing is getting in with too many positions. The second thing is also trading too large for their account size or trading too big at the beginning for their experience level. And I find that, since the barriers to entry to getting into the market is very limited, I mean, you basically need some money, a trading account, and online access. As long as you have that, you get into the market and now you can start trading. It's not as if you need, a degree or tools like, a dentist would or an office chair. So it's kind of with the low barriers to entry, a lot of people, they always think that they are better than they are. And again, this brings us back to the third point, which is the psychology end. And that's usually, again, since we always think that we as humans better than we are, that leads us to the overconfidence, leads us to thinking that we're really good. And especially in certain markets that continue trending higher, as we are, a lot recently for all these buying the dips mentality, that's where we get complacent. And then, a lot of traders I've seen over the years that damage their account and totally go either bankrupt or they stop trading after a while when they see a large, massive pullback or when things just go against them, whether you're short, whether you're long. And if things go against you, again, if you don't have the right mentality, the psychology, if you're not prepared, if you haven't seen those things, that's really where the damage can happen. So those are probably a few of the main things that I've seen over the years.
And so, what is the most common piece of advice that you give to your students as far as having, at least when it comes to having a morning ritual or routine?
Always have something planned for when something goes against you, and do your prep work, do your homework ahead of time. So, for example, for some people, they'll do their homework in the evening. So you might have an evening ritual. Okay, after dinner, I go ahead and do X, Y, and Z. Doesn't necessarily mean it has to be scanning charts or reading the news or this or that. And I don't want to mention any one thing because it might sway your decision into doing those things. But find a evening routine or ritual. If you don't like doing it in the evening, find a morning routine or ritual. For example, you might review your positions in the morning or potential trade setups in the morning. Again, you want to do something that's physical, so maybe a 5-10 minute exercise to get yourself physically prepared. You might want to also do something mentally, maybe reading a book, not necessarily related to trading. It could be just reading a book just either about psychology, it could be about business, it could be just funny jokes. And then again, have a routine or ritual for before you enter the trade. Then you also have the during you enter the trade, right? Do you want to check your positions, your account? Do you have the right numbers set up so that way you don't have the fat finger error? Because I know myself, I've also entered some trades I didn't mean to enter simply because I was going too fast. And then same thing when you exit a trade. Are you taking half off, a third off, a quarter off into strength, and what is that going to do to your position? So if you have kind of a little guideline, routine, a system, or if you look at deeper, a ritual to all those different areas, you'll be much better off because you'll be prepared rather than, oh, what's this stock doing right at this exact moment? Let me go in it. How many shares? I don't know. So, and that's how many people approach the trading game, I would say at the beginning, is they don't have a clear outline of what to do systematically, and they kind of go off the whim, the emotions, because again, we think we're better than we truly are.
All right, Sasha, last question, and I'll let you go. I'd be remiss if I didn't ask you for one setup that you're eyeing today. One setup, one stock you have your eye on.
I have a couple different ones that I'm always watching. I'm looking at the big stocks because I look at the 80-20 principle. So when you go into a grocery store, I take the top 20% of things that are healthy for me, the fruits, the vegetables. So the same thing here, it's going to be the top 20% of the stocks that everybody's really talking about, from Amazon, Google, Tesla, Humana. I got Home Depot, Netflix, Domino's Pizza, those kinds of things that I kind of keep on my watch list.
Alrighty, Sasha Evdokov is who's been on the line with us. He is a trading educator, is the founder of Rise to Learn. That's the number 2, Rise to Learn, and Traders Fly. You can find his videos on YouTube. He's also the author of several books: Start Trading Stocks, 100 Stock Trading Tips, and 245 Money Making Stock Chart Series is a book series he wrote. You can find all that on Amazon. Sasha Evdokov, thanks so much for hopping on with us today.
Hey, thank you so much. Enjoy the day.
Alrighty. 8:28 now. How we doing in the market, Joel?
We're still hanging up near the highs. S&P's up 3 3/4 points at 96.50. Pre-market high 97.75. I mentioned the old-time closing high 23.98.50. That'll be a level I'll be keeping an eye on this morning, and then up above that, if the market has the gumption to get up to the all-time high, 24.04.50 is the all-time high. Made that 4 days ago, and he had 2 other highs right in that area. So that's the big level on the upside. We will see if we can get some follow-through through the pre-market high. Moving on here, Dennis, we probably got about 30 seconds or so to the initial imbalances. Anything moving out there in individual equities?
Let's just jump AutoZone. I mean, we hinted on this one. This one has just been slaughtered here this morning. It's been in a rough go here for a while. Really, since 2016, this year started the year, or 2017, this started the year up at $800. We're now at $600, so you're talking about 25% fall here in AutoZone. It's down 51 points here this morning, so they are rocking it. Spencer, give us the details from the AutoZone report.
Well, that's what happens when you miss on both EPS and sales. Q3 EPS of $11.44 versus $11.66 estimate. Sales of $2.62 billion versus a $2.71 billion estimate. So they did miss on both there, and they surpassed that 52-week low of 616 during the pre-market earlier.
Big down move here, Joel. I mean, we have a psychological $600 level. What's the pre-market low?
Pre-market low just under that at 599.73. Huge drop here. Street leaning the right way into this one, Dennis. Look at the daily chart here.
Yeah.
Just a few days ago, we were at $700, now $600. I mean, to me, I'm coming short. I see this thing down, and I didn't even go down below, 605 to cover a short. I could care less if it goes down to, below that pre-market low, but just getting a little bit of a bounce here, up at 607 even. I mean, this thing is a thin trader anyways. There's been a little bit of volume in it. We are down at 600. Let me go back in 2015. If you really want to hold out for something different, 586 and a quarter. That was your February of 2015 low. But man, I just think it has got a little work to do on the upside.
Here's the problem, is that we always talk about the ball rolling in one direction. When it gets going in one direction, it's hard to stop. And this had the most relentless bull market. You look in 2010, the stock was at $152, and it ran up to $800. And for over a year, it kept trying to get up over $800, and it really couldn't do it. I know it got up to 819, but you can just look at the chart on the monthlies, and you can kind of see so many tops just up over $800. And then it started to leak. And now it's been leaking here for months. And we know when the ball starts going the other direction, it can go for a while as well. So to jump in here and say, okay, well, it's capitulation day, this is probably the low. Maybe it is, but it's difficult to just, roll back. You have overhead supply up here now. And, the bots start going one direction. It seems to be the way they go. So, you're down here. I just don't see this thing just bouncing back and getting it all. Like a take two is a different situation. You can say, oh, we already saw a stock bounce back, but take two has still been in a hard uptrend. This thing's been in a downtrend now for AutoZone for a while, and these trends are very pesky. This is the momentum market, and there's so many trend traders. There's so many trend algorithms out there. When the trend is going in one direction, it continues to go in that direction for a while. And unfortunately for AutoZone, the trend is now down.
And, you just got to look at this, Dennis. I like how you bring in a longer-term perspective. Besides the day traders that, I'm going to take this thing home long, leaning on the 650 level or short. But, man, there's so many people still sitting on a lot of profits here. I mean,
there
you mentioned. So, if they're selling this thing, maybe they were hoping to get out at 700, or 650 or get a bounce up to a whole number. But now it's like they're just out. Some of these funds that have been in it for a long time, 5, 10, 15 years, believe it or not, they're giving up some gains here. But there's still a lot of people sitting in profits, and I don't think that people realize that. Me trying my contrarian view, I'm thinking if I was short here. But on the other hand, I could take the view of, let's say I bought this thing in 2010 when it broke out above 400. I'm still sitting on some profits here. If you're really trying to trade this thing with any kind of size, good luck. I don't know. What about sympathy plays? They hit.
Oh, there's a ton of them here. Yeah, they are. But I'm cautious with, hitting something like O'Reilly's down 12 points here. And normally you're going to say, okay, yeah, there's going to be a huge sympathy move here. But again, we've seen this, and so just caution the person who's selling O'Reilly down 5% here today on the AutoZone numbers, because we have seen some sympathy plays bounce back throughout this earnings season where you've got the leader and they hit the sympathy stocks off the hop, and then by the end of the day they close green. Not saying that's going to happen here in O'Reilly, not saying that's going to happen here in AAP, which is another Advanced Auto Parts, which is down 5% as well. But I don't know if I'm coming in here short in these things, down here, and especially AAP. Look at a stock like this. Okay, so we're trading 139. We're down 9 points here. It's all sympathy off the AutoZone numbers here. You got a big level there at 140. If that could reclaim that 140 level, then then the people who like to buy the dip could be coming back in. Trend is not your friend in any of these things here, though. So that's one thing working against you. But there's multiple factors here. But 2-3 years ago, you'd be saying, yeah, this is no problem. Sympathy plays work. You're short and long what side of it, but because, sympathy has kind of been breaking down on a lot of different stocks, it makes me cautious to be selling and coming in here now with a new position when AAP is down 6%.
Also, I don't know if you talked to Rob Friesen lately, but I'd sure like to talk to him and see how these pair traders are handling here because, the
Tricky
relationship.
market.
Yeah, I mean, some of these relationships, if you got this spread on a long way, you're so many standard deviations out. I see the pre-market low, whole number, 136.98 here in advanced auto parts. Taking a look, you have to go longer term here. Boom, boom. 134.08. If we can get down there, that could be a good level. That was your low just back in November.
It's coming into a lot of support levels. So, you're at 138.40. You could argue the 140, and, you can say, oh, it's trading below it. But let's see what it's doing in the regular session. But, you're giving another level there as well. If we really start cascading down, you did have multiple lows in the 130s as well. So I feel like you're late to the party if you're coming here short at 138.30 now.
All right, on a day like this, who do you need to bring in to talk and get a different perspective on the market?
Get some rational. Nick always is rational, so I'm excited to have Nick.
Did you hear that,
today.
Nick?
I did. I heard rational.
You're always rational, Nick, here, and I got to get your thoughts here. I don't know if you're listening to our show off the hop, but I'm trying to rationalize how the market is up today, and I know you've got some theory there, Nick. How are we trading up after a terrorist attack?
Well, the key word you said there is theory, right?
Yeah.
And I've had this conversation over and over, and I had it yesterday with one of my people that in the chat room said that he was sitting on puts and he was trying to buy puts. And I told him, the only thing that's working is that dips will be bought. This was the message. And how long, right? And why? Because of the thesis, he said. And for as long as the Trump thesis is alive, the dips will be bought. The Trump thesis got shook out last week when they were talking of impeachment. But other than that, you can't disprove the efforts they're putting in now for months. So why would you start shorting now? You short term, the price action, but not the overall swing. So every day I have a statement. The markets are dangerously bullish, meaning they can rip 30 points, 40, 50 points like we've seen they could do and never look back, but they're hesitant. So the dips will be bought, and it shakes out enough steam from the market that it shakes out the really, really weak hands, and the buyers come in. So, I read the threads in your chat room that some people were now changing into trading, concentrating on some indices. So if you want to do that, then you have to make sure that you know the ranges. But the thesis is alive, therefore the dips will be bought. But today I added a new statement, which is the portfolio has to be be ready for the absolute worst case scenario from a terrorist attack perspective, because the attacks are coming more frequent, and yeah. I have to assume that they will continue to escalate, and at some point somebody's going to do something so massive that's going to be devastating to everybody all over the globe.
That's what I'm scared of too, and that's why I don't understand why the market doesn't seem to be scared of that event to happen.
Well, maybe they are, but they're not. They think they can click the seatbelt while the accident is happening, meaning they are not going to protect themselves until they see the problem happening. Well, I've seen problems happen. You have too, where you can't do anything. Your platforms
fast.
Your platforms will lock up, and you'll try to hit escape, control, alt, delete, whatever you're trying to do. You can't trade. So you have to be ready. So I'll give you an example. Like if I sold puts in stocks that I believe I like and that have been hammered, and I'm selling against really low values, I'm still going to throw some sacrifice puts for pennies to help me sleep through the next 30 days. Example, if I collect $1 selling puts in a stock, I don't mind spending 5, 6, 7, 8, 9, 10 cents that help me sleep through, say, July or June, knowing that if it goes to zero, I still make my money. So I have to be ready, my portfolio, for an absolute crash at all times, just from a terrorist perspective.
Nick,
so
go ahead.
Dennis. Okay, if you go ahead, Joel.
No, you were on a roll there, Dennis. Go ahead.
I was just gonna continue on the thought. So you're protecting yourself, and I just wanted you to, potentially outline that for us, because when the VIX is at 10, protection is fairly cheap. I mean, it has to be cheap.
Yep.
So, so just outline, so let's say, you are a rational person and you're saying the same thesis that you were just giving us, that eventually there's going to be some event here that is going to be mass. We're not saying it's going to be another 9/11, but there could be an event here that the market
Why
actually is
not? Why
hit on.
couldn't it be something
But it
like that?
could be. It's a
Yeah.
scary thing. It very well could be. And I think the same thing. How do you
It's
protect your gains here? Line it up for us,
okay. So I'll give you a specific example. Say on Nike dipped because of all the retail bad news that came out through earnings. Nike is not a brick and mortar store, but it gets hit nonetheless. So if Nike dipped and I can collect $1.30, $1.20 to sell a $45 put, right? And the stock is not 45. It still has a big buffer between now and 45 for January. I'm talking. So I collect $1.30. Wouldn't I spend 5 cents to protect it through June? Because that's how much it probably costs to buy a put through June. Probably a little bit more through July. Why wouldn't I do that? So if I buy that same put and the markets go to zero and Nike goes to zero, I still make my money because selling the put in January opens the risk, just like buying the stock now. Only I'm buying the stock at 45. So somebody that owns the stock at 45, they can sleep tight through June through July, however long you want to go out and buy that stupid put. Spend a few pennies to protect your portfolio and your family's wealth. And if it doesn't happen, just like buying insurance on the car, you don't run out to the phone and try to buy insurance as you're crashing. It's ridiculous. So if you've got an asset, protect it. That's all I'm saying. So if I sell a put at 45, I basically bought the stock at 45. And if the crash happened and goes to zero, I lost $45 a share. Whereas if I spend a few pennies to buy the $45 put through June or July, then I can sleep well knowing that if it goes to zero, then I own the right to sell that stock at 45, and whoever sold me that put for pennies will be on the hook from 45 thereafter.
Nick, what about people that, okay, let's say they really haven't introduced themselves to the option markets and they're not aware of the different opportunities to hedge their portfolios. Let's just throw a straight out number there. Let's say you have a portfolio of $500,000. You have some in stocks and some in fixed income and a little bit in bonds. How do what do you I mean, do you recommend taking the dollar value and looking something like an SDS or options? What are if you're not using the option markets, what would be a good way to hedge a long portfolio in this current market environment?
I wouldn't try to be too cute about it. Find out what is directly related to the asset you own and do that. For example, if you own tech stocks that are all in the NASDAQ, then you buy something that's NASDAQ related. So the simple thing is to do the Qs repeatedly throughout the weeks if you want, or the NDX. I find the Qs easy to trade. They're a lot cheaper, and you can calculate easier dollar wise, and it trades relatively to the midpoint of quotes. So the NDX tends to trade a little wild. So do it directly. If you own oil stocks, then use an oil ETF that's really liquid. If you have brick and the typical old school stocks, then you go with the Dow maybe if they're in the Dow components. So it depends on what you're holding. But if you're holding specific stocks, I would protect them specifically. And somebody said that they prefer dealing with the indices right now. That has pluses, but it also has minuses. I can see a floor in Apple, for example. I can't see a floor in the SPY. So I can tangibly see a floor in Apple, for example, using math, but it's hard to do that in a SPY is already Nasdaq being at an all-time high. The floor it could be a lot further down from current price than say with a company that's already been trimmed down to the bare bones.
Frankie 23 wanted to buy some downside protection, but wasn't sure if S&P puts are cost effective. And Nick, we've discussed this before, and I've discussed this with some of my money managers and stuff, like before the elections, and it's just like, at the time when you need the protection, it's the most expensive. So I know you have creative ways if you're buying puts to offset the cost here. Could you give us a quick example with the SPY or the
Well,
S&P?
well, we could do this via the S&P, and also we should address the fact if I own stock, how can I do it for free? There are ways you can do it for free with covered calls. So, but for the S&P, you have to get an education in order to get cute with that. Meaning, you can buy the longer dated put and start selling against it now. But if the crash happens, you're screwed because you can't monetize it pretty quickly unless you do diagonals of sorts. So it gets a little more complicated, and it needs a lesson all by itself. But the idea is, if I buy a put, I need to sell something else to offset the cost. But what is that something else? In the stock, it's an easier answer. So if I'm sitting on profits in say, I'm going to use Apple again, and I'm willing to lose money down to 140 in Apple or 130, and but I still want to participate to the upside. So I find a price target, the highest price target that Apple has, and sell a call above it, and then take the money and buy puts for the same period of time if I can do it, or for as long as I can without having to offset money out of pocket. So what happens now? Now, if the stock crashes, I'm protected from the puts I bought. If the stock rallies, I participate until the calls I sold, because then I am forced to sell the stock at a higher price than it is right now. So in essence, I paid nothing to participate in the upside up to that point. Then I'm forced to sell the stock, at which point I can turn around and buy it if I still choose to do so. And on the downside, I'm protected. So you do a covered call. I never sell a call without owning the stock, because then you're short and the losses are unlimited. So if I own the shares, I can sell covered calls, use the money to buy puts, and then I'm protected for free for a period of time. But the idea when they say it's expensive when I need it, that's because you're grabbing the phone while you're having a car accident, calling, Allstate and say, please insure my car, I'm about to wreck. Well, they're going to not discount anything for you, and you're probably on hold and get into a wreck anyway. So you can't be that fast. So if you're worried about an asset that is 200,000 or 100,000 or 50,000, whatever that big amount of money, I should be able to justify myself saying, I'm going to spend a few $100 to protect all that money. I owe it. I mean, how can I look my family in the face and say, hey, I didn't spend $200 to protect our wealth? I was too cheap to do that. So it's a waste, yes, but I do it every month on my car. Some people do it on their phones when they buy a phone. Would you like to buy insurance? Sure. This is the same. This is the same thing.
Time frames, Nick. Frankie 23's asking, like on the cues. I mean, are you on some of this stuff? I know there's more premium the farther out you go. Is there a sweet spot that 3 months, 6 months? Where do you go to find a premium?
There's not a formula, but I have to. It's a specific situation for everybody. It depends how much you're protecting and for what period of time. So I could do it cheaply every week or every 2-3 weeks or every month, because it's cheaper to buy shorter dated puts than to go way out in time. But if I go way out in time, I have to be ready to say, okay, this is money I know I could lose, and I'm totally okay, but I know I can sleep well, protected all the way through, September. I'm just using an example. So they have to do some research. There's no simple plug-in formula here and you come out with an answer. So the best way to do it is to get educated on options. And yes, they're dangerous, but they're no more dangerous than the stock itself, because it's smaller amount at risk, and the relative juice in the profits is way bigger than stocks. If you look at any option chain on a stock that's moving, you can see the stock as if it's moved 2-3%. You look at the calls that are now in the money, had somebody bought them, it's like hundreds percent. So the absolute values may be bigger with the stock itself. Like Apple is up at 154.8 right now, which, by the way, is a good point. It might be a trigger point for more buying there if it holds that level. But if once the stock opens, look at the calls that are now in the money that weren't yesterday. You'll see that they're up the bigger percentage than that up a percentage move in the stock itself. So more juice for less money. So yes, they're dangerous, but if you do it not recklessly, then it's a proper way of protecting.
All right, let's get a couple quick setups here before we let you go. You stuck your neck out on that price line trade. I know you sold some puts here, and man, I was eyeing that $1,800 level. It snuck below it. You sold it on a day of the earnings. A lot of juice in in those puts on that day. Are you just letting them sit, or did you already scalp out of them?
I'm letting them sit, and I own shorter dated sacrifice puts to guard the crash.
Gotcha.
So
Okay.
I practice what I preach. I collected thousands to sell the puts. I paid a couple of hundred to buy the other ones. So if all happens, I wasted $200, but I still made $2,000 for contract. So price well spent. Money well spent on the protection. So yeah, those puts were profitable at one point. They were red at one point on the dip, obviously, and now they're a little bit profitable. So I'm just sitting on them. They're doing their job. Time is
But if
working
it
on my.
did crash, Nick, did you have it like I don't know what strikes you did? Wouldn't I mean if it
I
did? Let's
I
say if it went to 1700. I mean
I,
you,
I at 1700 is not even touching my risk. So it would
okay.
have to come
Wow.
down to below 1600 by a
Wow.
lot for me to
Wow.
lose money.
Sign me up for those, though. You need a lot of margin. I need a setup in BlackBerry here. What a move. News. Man, I was thinking to see if it could chase it through 11, and I missed it. Big move here. 950 to 1150. I mean, the fundamentals are kind of supporting it. Trying to wait for a pullback in this one. Any thoughts on BlackBerry?
I can't chase it up here. I wrote an article the other day on BlackBerry on the way up, and I bet you those puts I talked about are now worth zero. Yeah, it was selling the June something like that. Anyway, oh sorry, that's the wrong one. But selling the $7 January put for about 25 cents. That's the only way I could chase
Okay.
it. You have
Okay.
to. I make an assumption as to where it's not going to go anymore, and I sell risk there, whether it's on calls or puts. But I can't chase it up here. I know there's some future potential news income stream, but boy, that's pretty fast.
AutoZone. Are you getting a scalpel out here to sell some puts in this one?
What is it doing? I didn't check
It
this morning.
closed
I know
it.
that.
It closed on its low of the session. It's 659.49. Not a great report here. We've traded down 60 points to 599.73,
Ah,
and we're
I
not.
had I had the puts lined up last night, but I chickened out of it. I didn't want to waste money. Um, but anyway, so AutoZone would be a place to sell puts. However, I cautioned against it. I've traded it before, and I find it hard to actually book profits and get out of positions when it's actually moving. I don't know what it is, but also there's the threat of the Amazon. So the headline I know broke a couple of times, but what if it's actual reality and it happens that Amazon is going to be a competitor of theirs? So be cautious. I'm not selling any puts in AutoZone just for those two facts.
We've been on the line with Nick Shaheen. He's the author of Create Income with Option Spreads. Giving us a calm look at the market here, Nick. Great input as usual. We'll talk to you again next Tuesday.
Thank you, guys.
All
Thanks,
right.
Nick.
Dennis, 852. Just very little movement here in the S&Ps. Do we have any kind of imbalance update?
I can update you here. There's actually some sizable ones here. Ford, 397,000 to buy, so getting a little bit of follow through from yesterday's small pop there in Ford, although it's still only up 6 cents here in the pre-market. GE, General Electric's 2 days in a row. I've seen some big buy imbalances. It's funny how these trends. GE forever we've been talking about sell imbalances, and now all of a sudden the last couple of days we've been seeing large buy imbalances. 200,000 to buy in GE, and it's trading up 12 cents here in the pre-market. General Motors, 32,000 to buy, probably moving along a little bit with the Ford move. Merck, 25,000 to sell. Alibaba, which continues to run, has 30,000 shares to buy on that. Nike, we were talking about that yesterday. 57,000 shares to buy in Nike. That's pretty much it. There's not a lot of. They're all other ones that I'm looking at on the S&P at least are pretty small.
Do you want out of your Ford's bet there? It closed
What
above
was the bet? What do we have? What's the
11.
price?
I have 1166 and you have
Oh, it's the
1060.
same price. They didn't go anywhere. No, I'm sticking with it. So here I am. I'm betting against my position because I'm long forward my investment account, and here I'm looking at you and betting that it's going to go down. That's just weird.
way to keep an open perspective on the markets. BlackBerry mentioned that with Nick. That's had an incredible run. Do we even talk about Agilent here? We really
No,
do.
we only talked on one earnings stock here. So we got Agilent. We did. Well, I guess we talked Take Two as well. Let's talk Agilent from last night. Is getting a lift here in the pre-market. Symbol A. Spencer, details.
Yeah, earnings after the bell there. They reported a Q2 adjusted EPS 58 cents versus 48 cents, sales of 1.1 versus 1.05 billion. So a beat on the top and a beat on the bottom. They also raised their outlook for the fiscal year, and they see Q3 adjusted EPS coming in a little bit light, and Q3 sales coming in line with the estimate.
It's a nice pop. The stock has continued to pop here. Joel will give us the after hours high here in a second. I'll just say I went out to the monthlies here and I went out to a 7-year chart. You had multiple highs, just under $60. We did sneak her ahead back in 2014 up to 61.22. So you're coming into some formidable resistance up there at $60.
High of the move in the pre-market is 58.90. The recent high that you had, I'm not sure what day this was, you went to 58.38, kind of hanging out there. So I'd like to really see it plow through 58.90. And wow, I was thinking this might be an all-time high here, but it's not. Agilent, nice whole number like 60. You haven't seen that since the tech bubble. So keep an eye 58.90 for continued follow through on the upside.
Also, earnings reports Toll Brothers here, and they had a pretty good quarter, and the stock is popping here as well. TOL running up into the report, and it's rewarding those who are buying that run up. It's up another 3% here in the pre-market. Spencer, TOL earnings.
Q2 EPS 73 cents, that beat by 10 cents. Revenue 1.363 billion versus 1.27, so a beat on the revenue as well.
Joel, what are you thinking here on the levels? I mean, we're getting up here. We're trading up at 39.15 in the pre-market. I mean, I just think, the psychological $40 level. You know, I like my psych levels. And when I go to the monthlies on this one, the monthlies do agree with me too. You had multiple highs in 2014 and 2015 around $40. Snuck up to 42.19 on August and the last week of August of 2015. But $40 looks like it could be your next major level.
Yeah, 39.49. That's a level you got to keep an eye on here. That stands as your pre-market high. Trading up over $1 in Toll Brothers. That really probably exceeds its average daily move. Maybe already doubles it. So maybe a little back and fill here before you make another run up. I mean, nothing, not going out on a limb here, Dennis. I think the high of the day may be in for in the session, and really doubt we see $40. If you're trying to buy this thing on a pullback, your after hours and pre-market lows been 38.82. So if it did fall through there, we got a little ways to fill the gap from yesterday's session, 38.29. So big move in for this stock. Pretty uncharacteristic, but it did have an earnings report.
Cracker Barrel, CBRL. Do we got those numbers?
We do for Cracker Barrel. Excuse me. They reported Q3 adjusted EPS of $1.82 versus $1.85. Sales of $700 million versus $713 million. So a miss on both those numbers. They did, however, raise their fiscal year EPS. And their sales is coming in just about in line. The Q4 EPS is in line as well. They're also raising, they announced a special dividend of $3.50 per share, and are increasing their quarterly dividend from $1.15 to $1.20 per share.
Not a great quarter, but they love special dividends, and I think that's probably why the stock is trading up here in the pre-market. It's up 89 cents here. Joel, what are you thinking?
Backed off the pre-market high, 163.97. So that's in the area of a high that you had a few days ago at 163.92. So the fact that we backed off a couple bucks off that area, that looks like good resistance to me. Could easily fall into yesterday's range. So if you're looking to cover short, attempt a long, you got the close at 161.41.
Ace has been talking about this stock PBYI, and this thing was wild yesterday. Puma Biotechnology went from $39 up to $69, then back to $52. It's trading at $53 here right now. Just a wild child here. I'm not sure what the news was on this yesterday. Maybe you can enlighten us there, Spencer, but hell of a move for PBYI.
Well, they had positive drug news yesterday just after the open, and shares were halted before that, and they resumed. And then we had some Adam Feuerstein tweets. Let me read through that real quick. No, nothing too relevant there. So trading resumed at around 10:14. but it's still obviously up well after that. And really, really big day. It was a positive drug news. It was a big breakthrough. So they have a breast cancer drug, is what it is, and and it was really, really good news on that drug.
Wild child, Joel.
Yeah, 33-point range yesterday.
33-point range for a former $40 stock.
Yeah, well, it was formerly a $270 stock, so whatever perspective you want to keep it in. Days like this, I think you got people stuck long, and I think you got people stuck short, and they'll be looking at the mark there at 52.60. So that's a level that I'm keeping an eye on. Of course, it's going to trade widely, but Dennis, I'll really go out on a limb here, and I think this will have an inside day.
I'm not going to bet against you on that one.
All right, Spencer, let's wrap up today's show and preview Wednesday.
Well, on tomorrow's show, we got J.J. Kinahan on the docket. He is the chief strategist at TD Ameritrade. Good to chat with him about the market. He comes with a pretty broad view, but can pretty much talk about anything there is to talk about with regards to the market, macro or micro. So pumped to talk to JJ tomorrow. Hope you enjoyed today's show. Hope you enjoyed our chats with Sasha Evdokov and Nick Shaheen. You can catch the whole show again on our podcast on iTunes, SoundCloud, or Stitcher, or you can just replay the show on Benzinga's YouTube channel, Benzinga TV. Please remember that all the information, material, and content from our show is for informational purposes, not meant to be investing advice. Have a good rest of your day. Good luck out there, everyone. We'll see you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.